is one of the worst days for Michael Saylor's Stretch STRC product. And even if you don't hold Stretch, you need to be watching what's happening because, of course, Strategy is one of the biggest holders of Bitcoin in the world. And everyone is wondering, is Michael Saylor finally in trouble? And the real big haters, you know, the trolls out there are saying that Saylor's Ponzi might be over. Now, that might be a stretch. I'm being hyperbolic, I know, but in the context of what we've seen in the last couple of weeks, did BlackRock, JP Morgan, and of course, Strive's income product finally break Stretch's monopoly? It's not the first time we've seen Stretch depeg like we're seeing right now, but I think everyone is wondering now, in the face of the recent Saylor controversies, in particular, the never sell your Bitcoin one, are people starting to lose faith in Strategy? I think that's the broader conversation. Yes, I know. We're doing a little clickbait today. Hey, caught in 4K. It is what it is. But let's get into this, okay? So first of all, let me start with just what Strategy says Stretch is, if you aren't familiar with what Stretch is. So Stretch, the short duration high yield credit. Stretch, or STRC, is Strategy's perpetual preferred stock that currently pays 11.5% annual dividends, payable semi-monthly in cash, and STRC's dividend rate is adjusted monthly to encourage trading around STRC's $100 par value and to help strip away price volatility. Of course, listed on NASDAQ. You can see current price, $91. Well, 91.14 cents. Now, what is probably the most interesting aspect about this is that they did just change the monthly dividend payments to semi-monthly or bi-monthly. I think I saw Saylor, I have it here, you know, asking everyone on Twitter, what should we call it? So it looks like Saylor isn't really freaking out about this. But if you're looking at this chart, it is pretty brutal here. You can see it drop. It's dropping really hard. It's dropping like a hot potato right now. Though, as you can see, there's been multiple drawdowns before, and Stretch has been able to recover. Now, what I find to be the most interesting part about this story is, I don't want to say this time is different because, you know, every time I say that, it's never different. But what did we see? And we covered yesterday. BlackRock is also now trying to create an income yield generating product that they just launched yesterday. BITA, the filter. BITA, B-I-T-A. And I think the biggest thing that might be throwing a wrench in this is what we're seeing with Strive, or the SATA product. So we all know Stretch has been cleaning up. They've been scooping up so much Bitcoin recently. This turned into one of the biggest ways for Strategy to acquire Bitcoin recently, and it seemed like it was on fire. It seemed like nothing could stop this. Now, of course, like I said, we have seen Stretch depeg before, and it's recovered. And this is just part of the game. But usually, it recovers before the dividend payment. Usually it closes around the dividend payment, right? And that was on the 15th. That was actually on Monday, and we haven't seen that yet. Now, I think in the face of what we're seeing with Strive or SATA, where, of course, they're doing daily dividends, it does seem as if Strive is taking a lot of the market share away from Stretch. And I think that might be part of the reason here. Now, there is a pretty good article here on Yahoo Finance. Strategy's dividend paying stock crashes. So we'll read a little bit of this so you can get a little bit of the context here. And then we will kind of compare this to what's going on with Stretch right now and what's going on with Strive. And we'll see kind of how the market is going to play out. Now, of course, there is a transition period here for Stretch. Again, it is going to go to payments paid out twice a month starting July 1st. Well, I guess ending June 30th and starting July 1st. So anyway, Strategy dividend-paying preferred stock, STRC, is crashing as investors worry about the sustainability of the monthly distribution. Again, this saga all started a few weeks ago when Saylor bought about $1.5 billion of his own bonds. And everyone was confused. Everyone was wondering, like, wait, why would he do this move? Like, what is the thinking here? Did Saylor get himself in trouble? Is Saylor above his skis now? Because there was the big conversation, the big meme going around was, look, Saylor's got enough cash on hand to pay back these dividend payments for like years. And then they did this buyback, this bond buyback, and it really threw a wrench in all the math. And it does cover this in this article. And at that time, everyone was wondering, it's like, yo, did Saylor finally make a mistake? Saylor's empire has been growing since he got into Bitcoin in 2020. They're getting closer and closer to 1 million coins. And the latest move that we saw, it was very confusing to a lot of people that were following along. And then the Saylor's running a Ponzi scheme started to really get louder on Twitter. And then, of course, to put a little cherry on top, they sold 32 Bitcoin. And that's, for all intents and purposes, what everyone's looking at the market, the reason Bitcoin crashed. Now, I don't think that that's actually the reason because, again, Saylor sold, 0.004% of its holdings. It's like, it's nothing. It's nothing in the grand scheme of things. And then later, the following week, bought another 1,500 coins. Following week, bought another 1,500 coins. And it's like, oh, Saylor's back at it. Not a big deal, right? Well, now everyone is wondering, did Saylor finally make a mistake? And how is this going to play out? So, Strategy's preferred stock finished trading as of yesterday at 91.79. Again, let's go back here. It is currently trading at 91.19. So, popping back here, its third lowest level since trading began in July 2025. The STRC stock, of course, has been designed to trade as close as possible to its $100 US par value. However, it has remained below that level for an extended period, and this is why people are talking about it. Now, my understanding of this, and I know you guys have been yelling at me and saying, Opti, you really do not understand the stretch product. And I will, for a long time, I really didn't. I still don't think I do, okay? All I understand is that if the stock goes above 100, then that's when they're able to buy a bunch of Bitcoin. And usually people would buy it before the 15th so that they can get that 11.5% dividend payment. Now they are changing the rules. It seems like people might be losing trust in strategy. And I think, again, that's probably the broader conversation here. Yes, a depeg has happened in stretch and it was able to recover. But in the face of the recent controversies around strategy and Michael Saylor, maybe that is the issue here. Maybe it's not so much that the stretch product will, in fact, break, but as we all kind of know, it is a sort of confidence game. I don't know if you guys saw the recent clips around Saylor, and he's like, look, people buy MSTR or stretch because they believe in Bitcoin, but they trust our company. They trust that we will be able to make a premium for them, that they'll be able to make some money on top of the Bitcoin holdings, on top of just holding spot Bitcoin. They will be able to get like a leverage Bitcoin play with strategy. And I think that, again, is probably what is going on here, okay? Now, there's other products in the market that maybe people are just rotating into these other products because they're shinier, they look a little better. But when I hear this and I'm thinking through this, it all goes back to the trust thing, the trusting of the counterparty. Now, I've seen a lot of people on Twitter when I was searching to really get the source material for you guys here. A lot of people are losing trust in strategy and stretch. Maybe they're just getting their feeling hurt because of the never sell your Bitcoin. Remember the clip from Bitcoin Prague? It's like, look, I told you never sell your Bitcoin, but I never said that on a corporate level, we were never going to sell Bitcoin. Maybe that's just putting a bad taste in a lot of people's mouth. And now they're leaving the stretch product. And of course, they're going to Strive or SATA. Anyway, the last time the preferred stock traded at par was on May 15th of this year. It's ex-dividend date. So about a month ago. right? Yes. Dates are all wrong. But like most dividend stocks, STRC often declines on its ex-dividend date before gradually recovering. But the stock has not regained par since going ex-dividend on June 15th of this year, which is where this controversy, the newest controversy is coming. The ex-dividend date is the cutoff after which new buyers are no longer entitled to the upcoming dividend payment. But analysts say that Strategy's preferred stock, which is backed by the company's Bitcoin holdings, is slumping as the Bitcoin price goes down. The preferred stock is largely traded in tandem with Bitcoin, and of course, we're 50% off the high. But there's also concerns about Strategy's ability to continue covering the cost of the monthly dividend. Strategy has enough cash on hand to pay 7 months of dividends. And I think this is part of where the controversy is coming from. Again, with that $1.5 billion bond buyback, it cut the amount of cash that they had for the dividends down by a ton. Now, obviously, I'm not out here basically saying that, you know, Bitcoin treasuries are a bad thing. It's just interesting to watch what's happening. Of course, the Bitcoin treasury hype cycle has been, for all intents and purposes, like the shitcoin hype cycle of this cycle. And a lot of people, I think, are very upset. And this is where I'm starting to just put on my Bitcoiner bear market hat. And it's like, I think people really want to see Saylor be sacrificed. I think people think that Saylor being the sacrifice is going to be the final sacrifice that we need for the Bitcoin bull run to come back. And I think this is where a lot of the, I don't know, controversy is coming from. But anyways, the dividend yield on Stretch stock is currently at 11.5, one of the highest levels amongst publicly traded securities. Some analysts say the distribution is not sustainable. However, rather than bow to its critics, Strategy has doubled down on its dividend strategy. Of course, now doing the dividend twice monthly. And I really do think this was just a response to the amount of capital that was attracted by Strive's SATA product with their daily dividends. And so now we're seeing, hey, look, again, I'm never going to say that I know better than Saylor on how to financially engineer a product, but people are out there getting concerned. And again, if this is just a trust me bro scenario, it's not really not, but if it's really just what Saylor said this week or last week, it's like people that believe in Bitcoin buy our stock and our Stretch product, our income product, because they trust us as a company to do what's right. This is, I think, where the big controversy is coming from. Is people are looking at the recent moves and they're like, wait, what's going on here? Maybe I need to get out of this. Maybe, as we always tell you, if you don't understand the product, maybe you should not be buying it. And maybe a lot of people got ahead of their skis here. Maybe a lot of people looked at that income, 11.5% return yield, and they're like, yo, this is too good to be true. I don't even understand what it's doing, but I want the money anyways. But, knowing me, I have some self-awareness. I know I have 42 IQ and I really don't know half the stuff going on in the world or even in finance. All I do know is, hey, I didn't understand this, so I didn't buy it. I understand Bitcoin. I understand buying Bitcoin and taking it into self-custody. All these other products on top of it. Interesting. Will they last the test of time? Probably, but I didn't understand them. So I keep it simple, stupid. The KISS strategy, keep it simple, stupid, and you will survive. That's where I was really kind of basing everything on. But as we're seeing, Strive has bought an estimated 300 Bitcoin via SATA as daily dividends gain momentum. Again, maybe this isn't so much a problem on Stretch, the engineering or financial engineering of the product itself. It could be just people are looking at the daily dividends and wondering, hey, maybe Strive has figured this out. Maybe it's the daily dividends that's really going to be the game changer. Now, in the recent week, we have seen a lot of controversy on Twitter in regards to why you would buy, quote, digital credit, or even what digital credit actually means. I don't know if you guys have been watching the back and forth between Matt Cole and Saylor and Parker Lewis and all of the other Bitcoin treasury guys, but it has become a topic of contention right now. Like, what even is digital credit? It sounds interesting, but what even is it? There's been the whole idea, we've seen the tweets on Twitter going something like digital credit is money, and us Bitcoiners are like, I thought Bitcoin was money. What is this talk about digital credit being money? It's like, no, Bitcoin is the money. Digital credit is, I guess, if we're even using that framing, digital credit. So how is digital credit money? You know, it is getting a little snake oil salesy. It is getting a little used car man salesy right now. And again, it could just be the fact that it is peak bear market. You know, everyone is upset about the price. We've been in this prolonged bear market. We still don't know if we're going to go lower. Everyone's like, man, this has been brutal. We haven't even pumped since, November of 2024. We're back at prices that were the same before Trump got elected. Where were all our promises? Where are all our gains? We barely got above all-time high, and now we're 50% off all-time high. And everyone, I think we're just mad. I really believe this is just bear market fatigue. Everyone is just mad. You know, as much as we all like to be above the fray and say that the price of Bitcoin doesn't matter, in peak bear markets is when you know that everyone is lying about that, okay? Everyone cares about the Bitcoin price. But let's look at the current data. So, of course, Stretch is under the $100 par, so they haven't bought in Bitcoin. Now, they are switching the dividend payments. They didn't buy it, on the 15th, so on Monday. And you can see, of course, since it's under, and obviously it's not the 15th, but people are still buying Stretch. So again, it's not that Stretch is necessarily breaking per se, but I think there is a lot of concern around, is this sustainable? Will they be able to pay the dividends? Is there something on the back end that is making strategy make some moves that aren't necessarily the best for you, the holder? Now, of course, also a recent controversy has been the Bitcoin per share controversy, that week by week, it does seem as if the Bitcoin per share for the MSTR holders is going down, though we've seen Phong Le, the CEO of Strategy, and Saylor come out and basically say, look, we are not necessarily just thinking week by week. We're thinking in long term. And if you're looking at MSTR year over year, they are in fact increasing the Bitcoin per share. But recently it is getting very interesting because SATA is doing daily dividends, and they are buying a lot of Bitcoin, or rather they are attracting a lot of capital into SATA recently. And you can see, you know, maybe the monthly dividend from the Stretch product, maybe it wasn't the sustainable version of this. Maybe it is SATA, and maybe this is what the market is kind of dealing with or digesting at the point. But what is very interesting is, of course, Strive comes out with the daily dividends of SATA. And then now we're seeing Stretch. I don't want to say it's in trouble, but it seems like the market or retail investors are moving away from Stretch into SATA. So maybe Stretch had the right idea with this product, but the execution, it might have been executed better by Strive. And we see, again, putting the dots together, that Strategy did change the monthly dividend payments to 2 times a month. So you can see that they are actually trying to combat the competition. And of course, BlackRock just dropped their own yield generating ETF fund product. So there is a market for this. People are looking for this. Now, in the face of what we're seeing right now, did Strive figure it out and Stretch now is no longer the shiny product out there? Is Strategy freaking out in the back end? Is Saylor stressed out right now? Are these valid concerns for you as a Stretch holder? Possibly, depending on who you're listening to. I know I've seen I'm not going to name the names because I respect them as Bitcoiners and content creators, but you've seen the Bitcoin treasury content creators. You've seen the suit coiners, for lack of better terms, really go out there, beat the drum and say, look, these products are good. Personally, I just hold Bitcoin. I'm just hey, I don't understand this. I'm just going to buy Bitcoin, take it in the cold storage. Bitcoin's on 50% discount. I don't know what the risk premium is, the Bitcoin risk premium is for holding these Stretch products, these Bitcoin treasury products, and personally, it's too much risk for me. I am a Bitcoin Luddite. I go back to the early, white paper of maybe we don't need to add more counterparties on top of Bitcoin, and maybe that's kind of the genesis idea of Bitcoin. But hey, we all knew Bitcoin was going to get financialized at some point. Now, looking at what Strategy's been posting, they don't really seem that concerned at all. They posted this on the 15th. Semi-monthly dividends on Stretch start now. The first record date under the new cadence is June 30th. So we'll see, it could respond back, but maybe people would rather have Strive. And then they doubled down on this. Stretch is scaling at roughly 350% annualized growth rate. And again, on top of the controversies that we've seen recently, in particular, a lot of the Bitcoin OGs, I don't want to say piling on, but we are starting to get peak bear market fatigue. And people are looking at the I like Bitcoin, buy my stock narrative that we've seen. And maybe everyone just got caught up in the fervor while we were pumping up, and then maybe they didn't think it was that big of a deal. But now we're seeing this is the controversy right now. The I like Bitcoin, buy my stock guys. Why would I buy your stock when I could just buy Bitcoin? From our perspective, as someone that's just been talking about this for a while on this show to you guys every single day, we've always been I'm just going to buy Bitcoin. Why would I buy this other stuff? Why would I buy your stock when I could just buy Bitcoin? I've been saying for a while, look, maybe there's a place for the MSTR and the Stretch product in your portfolio, but I've been saying just do what Saylor does. And what is Saylor doing? You take cash and you buy Bitcoin. I'm like, why would I give him my Bitcoin or my dollars so he can just buy Bitcoin? Why don't I just cut out the middleman and I just do it myself? Now, obviously, for a while there was a very, very high MNAV. There was a high premium for Strategy. Instead of just buying Bitcoin, like, guys, let's remember, last year, MSTR killed it. It's been doing really well. Now, in the face of this bear market, in the face of what potentially could be its final stress test, how's this going to play out? That's what we're all wondering. Now, for you as a Bitcoiner, I was kind of thinking through this, like, what would be the worst case scenario for us as Bitcoiners if, God forbid, the worst of the worst scenario happened and somehow Saylor blew up. Now, obviously, when you look at the different MSTR like liquidation prices, it really seems mathematically impossible for Strategy to actually blow up. But just say it did happen. For you as someone that holds Bitcoin in self-custody, like nothing happens. You don't lose your Bitcoin. That's the only thing that matters to us. Are we going to lose our Bitcoin? No. But would this be bad for the price of Bitcoin? Yeah, obviously. Now, that's not even going to say that they'd have to liquidate their 800,000 plus coins. I'm saying more from a market sentiment perspective, that if the biggest advocate for Bitcoin somehow messed up at the bottom of a bear market, that would be a prolonged, brutal bear market. Okay, we might drop really low just because of the confidence game. And I think that's where this is coming from. I don't think Stretch is actually going to be in trouble. It's going to be very interesting to see how long it does take to to repeg. It is going to be very interesting to see when they transition to 2 payments a month, how this works out, how the market reacts to that. But if you're using Saylor's words himself, it is a trust scenario here. He verbatim said at Bitcoin Prague last week that if you believe in Bitcoin, the reason you buy MSTR, you buy Stretch, is because you trust them as a company to manage their Bitcoin and their balance sheet in a way that will benefit you. And I think this is where the controversy is coming from. I think people are starting to lose, I don't want to say lose faith in Saylor per se, but if you are an investor in MSTR or in Stretch and you're seeing the recent moves here, It could just be some form of coordinated FUD going on the timeline. And I will acknowledge, it does seem like there's a lot of FUD controversy surrounding Saylor right now. And personally, from just a Bitcoiner that's been around for a while, I'm always like, everyone just wants a sacrifice. It's like Apocalypto, all right? Bitcoiners in the bear market is like Apocalypto, where, you know, they finally get to the temple. You know what scene I'm talking about, guys. I think that's what's going on. I think Bitcoiners in the peak of a bear market, they get very tribal. I think the thinking, you know, the cult thinking kind of goes out the window, or rather the cult thinking strengthens. Hive mind happened, and everyone just comes out with pitchforks and they want to sacrifice, you know, they want a metaphorical head for the bear market so that we can point at something and be like, all right, finally, this is the end. We can start to go up. And I think people are, again, metaphorically headhunting Saylor right now. That's kind of my take on this. Patience for it to play out is key. Yeah, I would 100% agree. MSTR is an unfortunate lesson learned in Bitcoin road to adoption. I really don't think MSTR is going down. It's just noisy and stupid people. I would kind of agree with that. I think people are really, really upset. And I've been showing you, I believe it was Michael Sullivan who's been doing really cool charts, basically showing that the Bitcoiner sentiment right now is like worse than it's ever been. People are pissed off. And I think everyone, well, not everyone, some of us are just like chilling. Like, yeah, I'm bored. You know, I'm burnt out from doing the show. I need to find ways to basically deal with my mental health issues right now. But other people are out there just pissed off, and they're looking somewhere to put their anger. And right now, I really do think that they're placing that on Saylor. And I mean, to be fair, Saylor probably isn't doing the best job right now. You know, the whole, like, I'm not going to listen to Twitter trolls. I agree with his statement. I 100% agree with his statement. I don't listen to the trolls. You guys troll me every single day. You know, yeah, sometimes it gets me upset, but I don't listen to the trolls, guys. That's basically what he's saying. But we will be watching this. This is definitely going to be very interesting because, as we've been seeing, the quote digital credit being the what would they say? Digital credit is the killer app of Bitcoin. We've been seeing the Bitcoin treasury guys go out on Twitter, and I don't think they're really doing themselves any favor right now. Now, obviously, you want to get out ahead of this. It seems like they're trying to do that. But this is just like peak bear market things. I think everyone's just looking for somewhere to blame, someone to get mad at. But it is going to be very interesting to see how long it takes for this to repeg above or repeg to $100. And I think that's why everyone's watching this. It's like, are people losing faith in Saylor? That could be one of the things that we're seeing. Are they losing faith that Saylor will be able to pay these dividends? Or are we just seeing a lot of capital chase Strive? It's SETA. Are they chasing the daily dividends? Do people fundamentally think that strategy has made a lethal mistake here? I think these are all the conversations, and I think they're valid questions. If you are an MSTR stretch holder, I think those are valid questions. If you're just a spot Bitcoin holder, you're like, I really don't care what they're doing with these Bitcoin stonks. It really does not affect me. It doesn't matter to us. Everything else is irrelevant. We just want to see the price go up, man. Once Bitcoin price rebounds, it will increase. Not ever stop lying. Yo, I'm not lying, okay? You're lying saying you don't care about the Bitcoin price. You're saying long-term, I agree. Long-term, we don't care. But look, let's be honest. If in 10 years from now, Bitcoin isn't going crazy, it isn't in the seven figures, would you really still be here? Who's lying now, man? Who's lying now? All right. Anyways, I'm just watching this, and I find it interesting what's going on. I think the battle is really what we're seeing coming from BlackRock's of the world. It's very interesting to see what Strive has done with the daily dividends. Obviously, I don't think Stretch or even further strategy is in an existential crisis right now, but we are starting to see there's some stress tests going on in the bottom of this bear market. Oh, Ron's getting mad at me. Can you promise that you would give us a good content? Hey, I didn't promise anything, okay? All right, okay. All right, Ron, I heard you. I'll keep it moving. Let's go to the first commercial break, and we're going to chat about, guys, my favorite topic right now. Did we disprove the 4-year cycle? Here we go. I'll be right back. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. Sorry, guys. Hold on. Ron, you said I promised less fun, more. I don't think I, in fact, promised any of that. You know, I just said, hey, it's me here. We will have fun on the show. Anyways. All right. The current Bitcoin price is $65,730 per Bitcoin, which is a 47.9% discount from all-time high. The market cap, we have reclaimed 1.32 trillion, and the current block height is 954,120. Okay, so I've been making the case that I think 60K has been the bottom. Now, obviously, the Bitcoin price went up to 66. It's currently at what I just say, 65. Could it go lower? It possibly could. And I did see our boy Pete Rizzo post a clip of Saylor saying he thought the bottom was in. I was looking for that this morning because I was going to make the case. A lot of people are talking right now of the bottom already being in. And as I played yesterday, it's like, are you really going to care if you don't buy the absolute Pico bottom at whatever, 50 something? If that is where we're going to bottom, who knows? But I still think buying now is a good opportunity. And I did see an interesting clip from Brian Armstrong. Now, obviously, I'm not the biggest Brian Armstrong fan, but he's also saying this. And here, actually, let's watch the clip, and then I'll make my case why maybe he's got a little more insight than me, okay?
I think Bitcoin is the new digital gold. I think it's going to be a key part of our economy going forward into the future. So I'm as bullish as ever. I think sometimes people look at these 4-year cycles that Bitcoin goes through as well, where you can kind of see the percentage of people who have made money versus not. And my instinct is we probably have bottomed at this point, maybe at the 60K number, but nobody can say for sure, of course. I'm optimistic as always. I think by 2030, we're going to have a much higher price, and I'm long Bitcoin, just like always.
Now, anytime I hear Brian Armstrong say he's long Bitcoin, I'm like, oh man, it's over. It's so absolutely over. We are never gonna financially recover from this. But obviously, Brian Armstrong runs one of the biggest Bitcoin, or rather crypto exchanges in the world. And I'm not necessarily saying that he has necessarily more insight behind the scenes on what's going on in the price of Bitcoin, because none of us really know. Even if you work in an exchange, you really don't know what's going on unless, you really have no clue. But I'm just going to keep doubling down on it, all right? 60K was the bottom. If I'm wrong, I'm wrong. 60K was the bottom. Coinbase. Okay. What? Yo, dude, I'm getting roasted today. Anyways, win some. Yeah, maybe. I would like to believe that the 50% discount from all-time high is where we bottom, and we are going to start to gradually grind up. I'm a wick-off accumulation maxi, which means we might be seeing one more drop, but I think we've seen the worst of it. And the only reason we're saying this is because there's people out there that are still waiting for a lower price. And it's so funny to me that every time you see people talk like this, they're like, oh, Bitcoin's 50% off. I'm going to wait till it gets to 70% off. Even if it does drop to that price point, they won't buy. So I'm going to just continue to double down on the idea. Time in the market beats timing the market. Just continue to accumulate Bitcoin. This is how you win. I agree. This is a Bitcoin news show, and we all, well, maybe it's not a we. I won't be a general. I love talking about where we're going to go, where the price currently is. I think the price is signal. And I think 60K was the bottom. It makes it so much less tiresome. What are you saying, Winsome Hacks? I absolutely don't want to pump. I'm not Michael. That's the opposite of this. That's really the opposite of this, is like, I don't want it to pump yet because I want to acquire a bigger position. Now, that's the thinking that we should have. But, it's peak bear market. People are getting depressed. Use the dip to accumulate. This is the way. This is the way. I'm getting roasted today, dude. All right. Okay. All right. Anyways. All right. We will get into some news. It's actually not bullish. So, hold your tomatoes, but I'm not the one doing this. Okay. So I'll keep the show moving because I do want to cover this. I am going to get a guest on today. Mason Carter of Giga is coming on. We're going to be talking more on Bitcoin mining, AI, energy, markets, etc. It's kind of been the theme we've been talking about here for the last couple of days. So I'm going to keep it moving so I can cover this crazy news story coming out of Illinois. Absolutely atrocious. If you know, we will talk a little bit about that before we move on to a conversation with Mason.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like BitKey and I recommend it to my friends and family. BitKey is a Bitcoin wallet built for real life, not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing, and no single point of failure that can lock you out of your Bitcoin forever. What really stands out about BitKey is the peace of mind. Recovery is built in, inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using BitKey. Go to bitkey.world and use promo code SIMPLY for 10% off your new BitKey. That's bitkey.world, promo code SIMPLY.
All right, guys. So my guest popped in early, so I'm going to bring you in a little early, Mason. So we're gonna cover a news story real quick, and then you and I will have a conversation. I've been they've been getting a little mad at me because I've been bringing the guest in a little early. So they're like, "You're not covering all the news story, bro. You're not covering all the news story. You're rug pulling us, Opti." So we'll cover this story. We'll chat about it a little bit, and then we will get into what you're doing over there at Giga Energy. So this morning, guys, we saw this happen. Crypto industry pushes back as Pritzker signs a 0.2% digital asset tax. So the Illinois, how do you say it? They're making fun of me. Illinois Governor J.B. Pritzker signed Senate Bill 3019 on Tuesday, enacting a 0.2% tax on crypto transactions. The decision drew immediate criticism from crypto advocates who pushed him to strike the provision. The measure is projected to generate $800 million, like whatever. The legislation introduces several new tax initiatives, with major revenue sources expected to come from taxes on digital advertising, sports betting, cryptocurrency investors, and social media. The Digital Asset Privilege Tax Act takes effect January 1st, 2027. It charges 0.2% of the value of the digital asset involved in a transaction. Out-of-state brokers are subject to the rule once Illinois sales reach $100,000. Quote, beginning January 1st, 2027, a tax is imposed upon the privilege of receiving any digital asset business activity by a customer in this state at the rate of 0.2% of the value of the digital asset to which the digital asset business activity relates. It shall be the duty of the digital asset broker making or effectuating the sale of the digital asset business activity to collect the tax provided by the section on each sale. The law also adds registration and reporting duties for brokers. All right. It sounds kind of insane, right? It's basically saying that if you are interacting with someone from the state of Illinois, that there will be a 0.2% tax on basically every transaction that you do. So if you are buying Bitcoin, say off Coinbase, and you live in the state of Illinois, when you take your Bitcoin into self-custody, there will be a 0.2% tax on that transaction. If you send it to another wallet of yourself, another 0.2% transaction. The way I saw someone basically say, it's like, look, okay, I get taxed when I, order a burger at a place, but when I take that burger home, I don't get taxed on it. It seems that the way this law is being written is that, okay, you're going to get taxed when you just take this into your own custody, or rather, with the example, if you took that burger home, there will be a tax with you taking it out of the restaurant. And I did see Joe Colasari, of course, he is a commercial litigator, and he goes, let me pull this up real quick. We'll get a little more on this. He goes, Illinois' new digital asset tax leaves a key issue open. If you move Bitcoin from self-custody to Coinbase and immediately sell, is that one taxable event or two? The transfer and sale could be viewed as separate statutory activities under the text of PA 1040464. However, it may be viewed a single economic event culminating in the sale. IDOR hasn't issued formal guidance yet. Article 3 itself contains no worked examples, aggregation rule, immediate sale rule, or specific treatment of deposits from self-hosted wallets. So it looks like if you are in the state of Illinois, I'm pretty sure he's a Democrat. They're trying to tax your Bitcoin, which is something we said was going to happen. It seems as if it happened a lot sooner than expected. And obviously, I think this is one of the things that as Bitcoiners, we've been talking about for a long time. that, look, Bitcoin should be capital gains free. You know, we shouldn't be taxed on just using Bitcoin. Well, we've gone the opposite way where you're going to get taxed on literally every time you send your Bitcoin. Maybe this is going to be further reasons for everyone to be using Bitcoin in self-custody. Maybe it's going to incentivize people to find ways to not buy Bitcoin off exchanges. Maybe it's just going to move Bitcoiners out of this state. That's probably what's going to happen here. So anyways, Mason, welcome to the show. Let's just get your initial thoughts on this rule and where's your head at when you're hearing this?
Yeah, thanks for having me. And I apologize. I lost my voice this weekend yelling at sports, so I sound a little funny, but
all good.
I mean, that is just horrible. I go back to everyone talking about Elon being a trillionaire. I think he deserves it. I think he took incredible risks and created a lot of value for a lot of individuals and institutions. And even if you were to let's take $1 trillion from Elon, what's that going to fund the government for a month, 6 weeks? You know, like I just, taxes are horrible and good luck. I will keep my Bitcoin and you can try to take it.
Yeah, it's actually insane. Like, no other state is doing this, and they're basically saying, like, you're going to be taxed on buying it, you're going to get taxed on transferring it, you're going to basically get taxed on just trying to store the Bitcoin. I think, obviously, it's most likely not going to work. Hopefully, it does get striked from the provisions for people that are in Illinois. But it's like, are we as Bitcoiners surprised? We all knew that we were going to see something like this happen at some point. Now, maybe all the Bitcoiners. I'm hearing Nico. I think he's calling me right now on my headphones, and he does the elections have consequences. I'm like, no, don't say that right now, okay? We do not need this.
Fathers are rolling in their grave right now.
Yeah, it is absolutely horrible. And obviously, in the face of whatever's going to happen this year in the midterms, it's like, if this is a precursor of what we're going to see if the Democrats do get back in power. Obviously, if they win the midterms, they can't really do too much. But if they do win the presidency in 2028, have we not been saying for a while, guys, they're going to come after us with a vengeance? It's going to be pretty brutal. It's not going to be a fun time. But hey, maybe we need the government to fight us again so Bitcoin price can go up one more time. I don't know. You know, we're thinking contrarian here. We're trying to figure out the best way to make number go up here. And maybe we just need governments to fight us. Maybe we need stupid laws like this so Bitcoiners start to take seriously what's going on and take it into custody and not loan it out, or not exchange it for an ETF or all the Bitcoin stonks and all that stuff. It's like, just let's get back to the basics here and make sure the Bitcoin is in your own custody. It's actually kind of insane that we saw this get passed, that this is actually like a law right now. So if you're in the state of Illinois, I don't know, you know, it's going to be very hard to like uproot your whole family and all that, but it's not looking good. Now, let's see if this spreads to other big blue states. And then maybe we will start to see the balkanization of the U.S. and all the Bitcoiners will end up in like Florida and Texas and Wyoming. Like, that's the only places for us to live now in the States, apparently. Anyways, let's keep it moving so Mason and I can have a good chat about what you're doing. And I guess continue a recent thread we've been talking about, like the convergence between AI and Bitcoin mining. And I think a lot of people are obviously not in Bitcoin, but when we talk about Bitcoin, like Bitcoin mining is one of those not so sexy topics. It's just like people are like, I don't care, man. It doesn't matter to me, but it's one of the most important aspects of Bitcoin. And a lot of people are still underestimating the impact that Bitcoin will have on the energy sector. So we'll cover all that. Last commercial break, guys, and Mason and I will chat about where we're headed and where we currently are and what Mason is building at Giga Energy. Last commercial break. I'll be right back, guys.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at Hive Digital Tech on X or HiveDigitalTech.com.
Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, cell towers can fail. Hurricanes, cyber attacks, blackouts, most people go dark. Satellite phones don't rely on local infrastructure. With Iridium, 77 satellites in orbit, you can stay connected across the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123 also has Starlink, battery backups, Faraday bags for your hardware wallets, and everything you need to build your own off-grid Bitcoin citadel. Go to sat123.com/simply and use promo code simply for 15% off anything in the store. Oh, Mason. Sorry, the chat's crashing out on me. They're mad at me today, but whatever. All right, Ron, I hear you. I'll do better tomorrow. Okay, I'll do better tomorrow. Anyways, Mason, thank you so much for coming. Let's start with, who is Mason Carter and what are you working on over at Giga Energy? We'll start with just the broad context for the audience here, and then I got some of your tweets here, and we'll kind of unpack some of them.
Nice, yeah. So I'm Mason. I used to be anonymous on Twitter, On-Chain Cowboy. I've been in Bitcoin for a decade now, and personally and professionally for about half a decade. Before joining Giga, I started a company called Acropolis, where we were helping businesses put Bitcoin on their balance sheet, and did some Bitcoin venture capital as well. Took some time off, got the call from Giga. I've been following the company since its inception in 2019. Giga started, just as a super brief overview, as a very humble Bitcoin miner. A couple of guys, Matt and Brent, in college started mining Bitcoin in East Texas, building what we call our Giga boxes. They were doing flared gas sites, and then eventually started building full on-grid sites. They need transformers, started building transformers. They need switchgear, switchboards, started building that. And now we have full-scale manufacturing in America and around the world, building everything that you need to get a Bitcoin mining site online, and now AI. We can get into this more, but I believe that Bitcoin and AI are brother and sister. And at the end of the day, like you said, Bitcoin mining is a very tough business. Most people ask, should I get into Bitcoin mining? You probably shouldn't unless you're an expert. But at the end of the day, that is how every Bitcoin that exists was created, through some miner. So it is still a very important piece of the puzzle. And I think Bitcoin, AI, and energy are all going to coexist into the future.
Love it, Mason. Okay, so I'll unpack all that, but I do want to kind of start with the Bitcoin and AI area right now, because like personally, I'm not of the opinion like artificial intelligence, artificial general intelligence. I'm kind of the opinion that a lot of the AI stuff is hyped. But what is your view right here? Like, obviously, I don't think we're going to go back into a world that doesn't have AI at it, but how big do you think this is? Like you just said, Bitcoin mining or Bitcoin and AI are brother and sister here. And I do have one of your tweets here that I found very interesting. Let me pull it up real quick. Maybe give some context here for everyone else. You're sitting in front of the two largest waves in human history, Bitcoin and AI. Build a boat. So how big, or rather, maybe what's your general view of where we are? Like, what makes you think that Bitcoin and AI are going to fundamentally be, the two technologies to change where we currently are, to change the trajectory of planet Earth?
I literally think that Bitcoin and AI are the two most important technologies and the two biggest waves of effort and capital in human history that we're aware of. I think obviously everyone watching this show understands how Bitcoin is going to fix the money, fix the world. I don't want to go on that whole rant, but AI at the same time is exponential by nature, and it's physical. So there is no going back smaller. You're always going to need more megawatts and then gigawatts and more, because the models need more power. And in the background, we're going to have the ability to solve nearly every problem of aging, science, research, astrophysics, things that we just don't have time to do. And I'm a very bullish and optimistic person by nature, so maybe to a fault, but I mean, and I also believe that AI is going to take the front seat right now. It's obviously taking a lot of liquidity out of Bitcoin, but at the end of the day, they will exist in tandem. And I seriously, I'm just so excited. I can't believe that I'm alive right now.
Yeah, I agree. I mean, you know, a lot of people complain about the modern world, and I keep saying this is the best time to be alive. Whether you're bullish on AI or just bullish on Bitcoin, this is the best time to be a human. Like, without a doubt, I could not live in any other time in human history than right now. I'm always thinking I was born for this. I was born for this time. But anyways, I since you're working at the intersection of Bitcoin and AI, and obviously energy, that's what you're doing. What's your thoughts on the whole, you know, for a while there, they were always saying, oh, Bitcoin mining is going to boil the oceans. It's using too much energy. And then the whole AI hype cycle came up and they're like, wait, actually, we need more energy for data centers. And it's funny how you're seeing that transition where they're like, actually, we need a lot more energy. So all the ESG stuff has just fallen off the wayside. And they're like, actually, maybe this Bitcoin mining thing isn't that bad, but really we need more data centers. We need more energy for the AI. What's your thoughts on all this? Did you find that as hilarious as I did? I'm like, man, it's so funny. Once everyone starts making money in AI, they're like, actually, we need more energy. Enough of this too much energy use stuff. We actually need more energy or else we are cooked.
It is funny. It is funny to see the narrative switch, especially among big tech CEOs, people like Zuckerberg and Bezos and all the people that were screaming that the world is burning and all that. But the reality is energy is abundant on Earth in many different forms, whether we're talking oil and gas, we're talking solar. I'm not too big of a fan of wind, but there's wind, there's geothermal, there's hydroelectric. And the other reality is the more energy a society uses, the more prosperous and more healthy and wealthy your society is. The most successful and prosperous countries on Earth, it's all in direct correlation. And we are not, I mean, maybe this is controversial, not on this show, but I don't think global warming is what it was cracked up to be. I think that energy is a good thing, and we will figure out, oh, I forgot nuclear. And we will figure out more ways to get more energy. I mean, that's what we're doing right now is going out to West Texas where natural gas is free, or going out to international places where, so sorry, a bit of a rant, but historically, if you wanted to provide charity for places around the world that are disadvantaged, you have to rely on someone like Bill Gates, a Gates Foundation, to go out there, build the infrastructure that they need, and constantly come back. And what we found is if they don't come back, the power goes away, and it's not actually causing the consequences or the effects that they want. But if you can go and be an AI off-taker or a Bitcoin miner and go to a community and say, we're going to use your cheap power, your abundant power for our own use, and then we'll let you have part of it for your use. That actually creates a capitalistic economic incentive to provide charity around the world. And like I said, the more energy you use, the better, healthier, and wealthier your society is, because you have running water, you have electricity, you have access to the internet, you have all the things that we take for granted in America. And then at the same time, we're using this intelligence to solve the world's problems, which I think is a really amazing thing.
Yeah, I have a lot of friends, in particular Huddle Tarantula. I know he's off grid. He's a madman. Yeah,
I just
Tarantula
dinner with him in Austin about 2 weeks ago. He is
he's a madman. He's a character. I love Tarantula. Shouts out to Tarantula. I haven't talked to him in a little bit, but I would always have conversations with him and a couple of other friends in regards to just how the big oil producers are viewing Bitcoin. And you know, you're out in West Texas. I'm sure everyone has the landman, you know, idea in their head right now. But from your personal experiences, what is the reception that you get as a Bitcoin miner today? We've come a long way. I think a lot of people are starting to realize that, yeah, Bitcoin's not going away. This Bitcoin mining thing might actually be helpful for more traditional energy producers. And there has been a lot of, proof of concepts with like our friend Tarantula that are doing this exact thing. So if you were to go right now, maybe to meet a new oil producer out there in West Texas, what do you think the reception would be? Are they more favorable to this idea? Is there still a little bit of education that needs to be done? Like, where do we currently stand with, Bitcoin meeting the more traditional energy oil sector?
I've always said that education is plentiful in this industry. There is a podcast or a book or a YouTube video or an article or a website or a tool for every single person that wants to get into Bitcoin. But that's the thing, is you have to want it or need it. And I came into Bitcoin because I needed it. I grew up poor, or pretty poor, not like slums, but pretty poor. And my family got debanked when I was 10 years old. They had some previous debt. Excuse me. They had some previous debt, and the creditor came in, froze their only bank account. We had 2 debit cards, and that was it. So we couldn't buy bread, couldn't buy gas. And I was 10 years old. And I remember going, how I thought that was our money. I don't really understand how that works. So that when I discovered Bitcoin on YouTube, actually, I understood immediately, wow, this is money that can't be taken from you. And I say all that to say that when it comes to energy producers, people in Texas, people that are actually building these things, they have to have a reason, whether it's they need to use the energy for something, or their savings are not outpacing inflation, or for whatever reason. And once you have a reason, people are very receptive.
Yeah.
But with that being said, still it's just like politics. It's going to be half of the people hate it. It's boiling the oceans, and half the people are like, hey, this is actually pretty good for me.
Yeah, actually, before I do want to kind of go into these plug and play pods, but I think the audience would love kind of your perspective of, you've been in Bitcoin for a decade now. Are things moving quicker than you expected? Did you see this playing out a lot different? Like, what is your current feeling with Bitcoin as we stand today, whether it's the Bitcoin treasury companies, it's Wall Street, it's politics, it's the Bitcoin mining? Like, how has that journey happened for you? And where do you currently stand? Like, are you getting disillusioned, like a lot of people were saying on Twitter, that like, this isn't happening? The full Roger Ver crash out here. Like, I thought it was supposed to be payments, and now it's not. So where do you currently stand on Bitcoin in your 10-year journey? And then we'll start to talk about what Giga Energy is doing more specific.
I absolutely am more confident in Bitcoin than I ever have been in my entire life. Because when I got into it, I was a teenager, and I looked up to people like Warren Buffett and Jamie Dimon and Larry Fink. And they said it was a pet rock, rat poison, money for criminals, all that stuff. And I thought, hey, maybe I have no idea what I'm talking about. My family wasn't financially sophisticated, like I said. No one went to college. So I literally went to college to study finance to make sure, am I right about this Bitcoin thing? And then after 4 years, busting my, sorry, I don't know if we can curse.
You can curse. You can curse. It's okay.
Busting my ass in college and really studying finance, I was like, yeah, this is legit. And now I see there's like 5 pillars that I can see. I think there's the institutional adoption. There's the energy shock with the Strait of Hormuz. There's the fiscal reality of America with all the 40 trillion in debt, the supply and demand, all the new treasury companies buying 20, 30,000 Bitcoin a week. On top of that, these digital credit products that you were talking about earlier, which I'm actually kind of bullish on those too. And then the AI transition. I think all of those 5 things lead to money printing. They lead to inflation. They lead to reasons for capital to be dumping into Bitcoin and reasons for people to be interested in it. And back 10 years ago, I mean, Bitcoin was a few $100 million asset. It was just a tiny little, or a billion, but tiny little thing. And now I know Elon is worth more than Bitcoin already, but everything is happening exactly as it should, I believe. And I think Bitcoin, in terms of risk, in terms of what the actual downside is cheaper than ever before. I mean, if now is a fantastic time to get into Bitcoin and to hold it for 5 to 10 years at least.
Yeah, I couldn't agree more. I've been saying that constantly. You know, we've seen Wall Street show up, Bitcoin treasuries, seeing central banks buy it. And since I'm always talking with the chat every single day, and I'm on Twitter, you know, just obsessed with Twitter, it is interesting that you're seeing a lot of people, I think, get a little, I don't know, disillusioned because of this bear market. They're like, man, it wasn't supposed to happen like this. I wanted everyone to be peer-to-peer, you know, sending Bitcoin directly. We didn't need the institutions in Wall Street. And I'm of the opinion, like you, it's like this was going to happen this way anyways. But I'm also more of a, the way that it's happening is the way that it was supposed to happen versus living in this utopia. You know, it should have gone this way. I'm like, this is how it's going. Anyways, enough of that ranting. Let's talk about Giga Energy. Let me pull up your website again. Oops, sorry, wrong one. Let's get to the website here. Actually, looking at this right here, plug and play Bitcoin mining infrastructure. So my first question here, obviously, I'm not a miner. I've walked in these big, you know, plug and play products. My question here is, if you were looking into mining Bitcoin or maybe doing the whole Bitcoin mining to AI transition, if you bought one of these, are they fungible? Like, if you bought one, could you mine Bitcoin in it and mine AI, you know, data servers, or do you need specific ones?
So these Giga Air boxes and Hydro boxes, those are specifically built for ASICs and built for Bitcoin mining. And that was the product that Giga started with. But now we just recently rolled off our AI pod. So it's essentially the same. That's the Giga pod right there. It's essentially the same idea, but built for NVIDIA GB300s, built for AI. It's a little bit different. You have to have redundancy. You have to have backup. You can't ever go down like you can with Bitcoin. So it's still modular by design. And this allows us to build data centers faster than anyone. Right now, if you want to get a data center online, it might take 12 to 24 months, even longer. But we have a land origination team, power team, engineering team. We own the entire stack of infrastructure that we build ourselves. And the other thing that makes Giga unique is we put these units into production in the factory, and we do as much work in the factory as possible. So that way, when you're dropping, whether it's air boxes or AI pods or hydro boxes in the field, you're more just dropping Legos, and you're plugging, you're playing, you're bringing your ASICs, you're bringing your GB300s, and you're online, which is what we need right now.
Interesting. What is your what's your general view of the kind of recent move we've seen from a lot of public Bitcoin miners going into AI and data centers? Do you think that's a smart move? Does that concern you, that hash rate? You know, we just had a huge difficulty adjustment of, you know, 11% or what happened this last week. Like, do you think that's a smart move for the companies? Is there any concern on your end as just like a more pure Bitcoin miner perspective? Like, what's your general take on that whole transition that we are seeing right now?
You know, I obviously sit on both sides, and I'm bullish on both, but there is a risk. I think if you're unplugging all your miners right now to build a data center, like I said, it might take a lot longer than you think. And you could have been hashing the entire time. Let's say it takes you 12 to 24 months, Bitcoin rips, and then you don't even have your data center online yet. You don't have an off taker, and then you're missing out on a lot of Bitcoin. But with that being said, I'm not concerned about mining in general because Bitcoin is built for this. The difficulty adjustment is that's what it's there for. And as some miners unplug for AI, other people will take the opportunity to find cheap power and plug theirs in. And I think it will only lead to more decentralization of Bitcoin, especially globally around the world. Most of the mining and AI right now is in America. But as soon as that starts to get exhausted and you need more, it's going to spread further around the world for that cheap power. So I'm really not concerned. I think it's great for the companies that are boosting their share price and enterprise value and creating a lot of value for a lot of people. But you just have to be careful and make sure that You don't go all in on AI. I think being all in on Bitcoin mining is fine because that's what you specialize in, but just be opportunistic. And that's what we're doing. We build full sites. So it depends on the size of the land, where it is, the price of the power, the off taker. All of that is dependent on, should this be an AI site or should this be a Bitcoin site? And I think in the end, there's going to be a mixture of both because, like I said, for AI, you have to be online all the time. But for Bitcoin, it's much more flexible. You can turn off, turn on, which is, I think, a strategic advantage for data center operators and Bitcoin miners.
Interesting. Okay, so I don't want to put you on the spot here, Mason, but earlier you did say that if you are looking to get into Bitcoin mining today, it might not be the best time. So where are the opportunities? Like what would you tell someone if they were looking to get into Bitcoin mining today, but more than just like a hobby thing, you know, like if they see Bitcoin? I think we all kind of go through the same journey. You get into Bitcoin, you're like, oh wait, I can just plug in computers and make Bitcoin. Like, yeah, I'm going to do that. Then they do it and they kind of get wrecked and maybe they just completely tune out Bitcoin. So is it a good time for people to start Bitcoin mining setups right now? Like, is there opportunity still in Bitcoin mining for just the average person? Or is it more so for people with deep pockets, and from your opinion?
Yeah, I meant more of for the average hobbyist type of person.
Okay.
If you're just, hey, I want to get some Bitcoin that has never touched an exchange, I'm going to plug in some miners. It's just more difficult than you think it is. If you're really interested in it and this is what you want to do and you're going to operate it on a daily basis, or you have experienced operators to do that, then yes, I think now is the best time to get into Bitcoin mining and invest in infrastructure. But if you're just doing this as a hobby, I just want mailbox money, I don't really want to touch it, I mean, it's just not realistic. And you really have to invest time and energy and dedicate yourself to it. But like I said, difficulty adjustment is on your side. So I think it's a great time if you really want to do this.
Love it. Okay. You did touch on this earlier, but I do want to kind of bring it all together. And you have a good tweet here that you said, basically, now is the best time to be buying Bitcoin and Bitcoin infrastructure. And you laid out your different cases here, you know, institutional adoption, energy shock, fiscal reality, supply and demand, AI transition. So in the current face of the geopolitical, the macro, the energy landscape, could you just expand on this one more time for everyone? Because again, since we are in this bear market, I think a lot of people are maybe getting caught up in all the noise, and they're getting caught up in the new hottest controversy on Twitter. And from someone that's more on the back end, on the not so sexy side of Bitcoin and the Bitcoin mining sector, like, give your grand view of where we currently are and where we're headed from, what's today's date, the 2026 era onward.
A lot of money printing is on the horizon. To just put it up in one sentence, I mean, I just think that all of this leads to money printing. I think the Strait of Hormuz having 25% of the world's oil cut off is a major factor that is going to cause inflation. I think we're on the precipice of copying the 1970s style. You go up, a big peak of inflation, and then it goes down. Everyone thinks it's over, and then you go even higher. I think they want to win the election. They want to cut rates. That's more money printing. I think the U.S. fiscal reality, the 40 trillion in debt, is completely unsustainable. And if you know how math works, numbers get bigger and bigger and bigger and bigger. And soon your dollar menu at McDonald's will be the $100 menu. And one thing I love to refer back to is Parker Lewis. He has this, he also lives in Austin, and we go to the same grocery store, so I can confirm.
Yeah, I saw that. I'll pull it up. I saw it on your Twitter. I love that you brought it up. I've been meaning to bring this up on the show, so let me scroll, but continue, and I'll pull it up.
Essentially, a few years ago, the price of a grass-fed ribeye was, I think, $19.99 or $21.99. I think it's something in the 40s now, and if it continues on the same pace, a pound of ribeye at Whole Foods will be over $100 in 8 years. which
That's crazy.
people just don't believe it. It's so funny. I feel, I tell all my friends and family, I'm like, guys, your quality of life is being stolen in broad daylight. And once people realize this, again, Parker Lewis, gradually then suddenly, that's how you know that you need Bitcoin.
Yeah, the ribeye inflation calculator is insane. Let me try to go back as far as I can here. Okay, so in what is this? 2021, a dry aged boneless ribeye was $21.99 per pound. Now let's fast forward to the most recent price update. The most recent ribeye number, it is $37.99 for the same exact ribeye. What's he said? 17% inflation annualized.
And that's
90% cumulative since 2020.
Yep. He doesn't have a picture of the
insane.
2020, but yeah, 90%. Your steak is almost double the price in 5 or 6 years.
It's insane. So I guess the takeaway here, you know, for everyone yelling at me, look, takeaway here is get yourself a ribeye today. Yeah, it's going to be more than it was in 2020, but it's going to be cheaper than it's going to be in, I don't know, 5 years. So that ribeye is going to be $100 ribeye in a little while. I think the opportunity cost here for spending Bitcoin for a ribeye today, I mean, it's going to cost you less than in a few years. So the ribeye inflation calculator never misses.
I highly recommend
cost of living.
Highly recommend the book Fiat Food. It explains how they've hid inflation in the grocery store by forcing you to eat all these processed Cheetos. Like, it's easier to print a Cheeto than it is to print a cow, and that's why beef is a really good litmus test. I think I saw that comment for inflation.
Yeah. Where do we go? Ribeye is the litmus. Yes. Ribeye is the best cut, guys. Come on. This is luxury. Here. Mason, actually, I have a question. This is more for the audience here. I don't know if you get this often, but I do know that our audience a lot of times are always asking for jobs in Bitcoin. Could they reach out to Giga Energy if they're in Texas? What's your view on just hiring some Bitcoin plebs? How's that work out for you guys?
You absolutely can. I would go to gigaenergy.com/careers. Right now, Giga is scaling like crazy. We're hiring 5 to 10 people a week right now. The company should double by the end of the year. We need people across every department: engineering, legal, finance, M&A, everything. We are hiring everything. So if you are interested in energy and Bitcoin and AI or Giga or anything that we do, please feel free to hit me up. My messages should be open on all platforms, and we need talented people. And a lot of times Bitcoiners are the most talented people because they're able to think critically from first principles about money, which I'm not motivated by money. I am motivated by just this exciting world that we live in. But at the end of the day, everything that we do is for money. And if you don't think that's true, then you're lying to yourself. And the money is broken, and the people that are able to realize that right now, I think, are talented. So yes, hit me up.
Let's go. Okay, so
I love it.
You want them to hit you up on Twitter, or just is there like a contact form on gigaenergy.com?
Twitter, LinkedIn. I'll put you in touch with the recruiter.
Okay, guys. So his Twitter is On-Chain Cowboy. I repeat, On-Chain Cowboy. If you are hanging out in the chat and maybe you're getting bored and you're like, yeah, at this point, why don't I just go all in? Hit up Mason or go to Giga Energy and maybe you can get a job. Actually, dang, I'm blanking. I had one more question. I'm completely blanking on what I wanted to ask right now. Oh yeah. Do they have to live in Texas?
No.
Okay. So remote job, remote Bitcoin job. Could it get that much better, guys?
We have roles all over. I mean, we've got factory roles in Houston, factory roles in Long Beach, California. We've got an office in San Francisco. We've got an office in Houston. We have remote roles. Like, I work remotely because I travel a lot. I'm in sales. So yeah, it's very flexible.
Let's go. Okay, Mason. Well, really appreciate it. Usually I like to give our, guest for the day. I was going to say audience member for some reason. Guest for the day. Just a final 2-minute plug. It could be, you can plug Giga Energy, you can plug Bitcoin in general, you could just give general life advice. Mason Carter, what is the final message you want to leave with the Simply Bitcoin audience? Here's the floor.
I would say don't become disillusioned. You are living in the most exciting time in human history, and I'm very confident of that. And the fact that you're watching the show means that you should stay humble and stack sats and don't fight on Twitter. I mean, it's just ridiculous. All the people going back and forth at Jack Mallers and Michael Saylor and this, that, and the other. AI, everything's bad. No, it's not. We are objectively living in the best time where you can literally do anything. And I think we're already taking it for granted. You can log on to your favorite AI, Grok, Claude, whatever, and you can do anything instantly. You can build anything. You can analyze anything. You can literally do anything that you set your mind to. So my message would be to stay positive, stay humble, stack sats. If you're interested in Giga, hit me up. But that is more important. Now is the best time to accumulate Bitcoin I think there's ever been.
All right, guys. Mason, thank you so much. I totally endorse that message. You know, everyone knows I'm also a perpetual optimist. You know, some days, of course, I come on the show, I'm worn down. They all know it. I'm only human after all, but the message of positivity and optimism is one that I personally don't get tired of. And I don't think a lot of people hear it enough, especially since we're all on social media. And social media just has a way of like rage baiting us. You know, it's just constant doomerism. And sometimes I think we forget to just give that message like, hey, guys, zoom out. We're living in the best time. Be productive, provide some value, stack some sats, and life's going to be so much better. So anyways, Mason, thank you so much for coming on. Guys, that's the show we got for you today. Ron, I hear you. I'll try to do something positive tomorrow, okay? We'll try to be more positive tomorrow. Less fun, more signal tomorrow. Anyways, guys, I will catch you on tomorrow's show of Simply Bitcoin Live. Peace out, everyone.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.